Gold surging now is not catching up to the inflation of 2020. Gold surging now is telling us higher inflation is coming ahead. And I do believe that's true. I mean, we're told from the White House that we have the greatest economy ever. And I'm not beating up on Trump here. These are facts. Trump is saying we have the greatest economy ever. And yet, it's okay and necessary for us to have multi-trillion dollar deficits. Like we literally have wartime levels of deficits in the United States. If gold and silver get cheap enough, I would go back into that. But I'm also planning to rotate into copper because I'm very bullish on it going forward.
In today's market, something powerful is unfolding. Gold's recent surge isn't just catching up to the inflation we experienced back in 2020. It's warning us about what's coming next. Rising prices, increasing deficits, and a global economy running on borrowed time all point to a future where inflation isn't just possible. It's inevitable. According to market analyst Lobo Tiggre, the numbers don't lie. We're being told that the economy is stronger than ever, yet the U.S. continues to run multi-trillion-dollar deficits, the kind typically seen only during wartime. How can those two realities coexist? That contradiction alone tells us that the system is under strain. Gold, long seen as a barometer of financial truth, is signaling what's ahead. When investors lose faith in paper promises, they turn to assets that hold intrinsic value: gold, silver, and increasingly commodities like copper. This isn't about fear. It's about preparation. As the dollar weakens and inflation creeps higher, he sees opportunity in real assets. While gold and silver remain foundational, the next big wave could come from copper, the metal driving our transition to cleaner energy and technology. Because in every economic storm, those who recognize the signals first position themselves best. Stay informed, stay prepared, and don't forget to like, share, and subscribe for more insights on gold, silver, and the markets shaping our future.
People out there have noticed where the spot price is higher than the futures price. That's really interesting. And it has a specific cause over in London where there is an actual silver squeeze going on. I find it very amusing that silver bulls have tried to engineer a silver squeeze and make the shorts suffer for their positions. And Donald Trump has achieved this actually this year, I think completely inadvertently. The tariffs and all that gold and silver bullion that got shipped from London to New York and Chicago, got shipped to the US, that's actually produced a physical shortfall in London now at a time of need. So there is an actual squeeze going on. And that's why, in my view, spot silver went ahead of spot futures this week. Why spot silver hit 54, where the futures haven't yet. And there's good news and bad news here. The bad news is that if that gets sorted out in the near term, which I don't think today's price action shows, I think today's price action, because it's gold and silver, is a reaction to broader economic inputs. This is important because if silver got an extra tailwind, an extra boost from this squeeze in London, that will be sorted out at some point. And what I really like about this, I think this is a good thing. It's not just that the squeeze is on and the shorts deserve to be squeezed. And okay, I agree with that. I can have a little schadenfreude there. But the reason why this is important is because even your most diehard gold and silver bulls will tell you that silver usually lags at the beginning of a bull market and then more than catches up at the end. So if silver shooting up to 54 was the beginning of silver catching up with gold, that would actually be a signal that this bull market is close to an end. And I don't agree with that. As a fundamentalist, looking at the market, looking at the money printing, the central banks, and the people rotating, all these other things going on, the geopolitical risk, I don't think we're near the top of this market. And it was worrying me that silver was starting to catch up to gold before I thought it should have. There is a problem with the actual dealing in the LME and fulfilling these contracts. And there was an excessive flow of silver from London to the US because of the tariffs. And now that is being reversed. And there's people out there saying, oh, well, they can't fix it. This squeeze will last a month because it takes that long for a ship to get there and it's too expensive to fly silver. I understand that they are flying some silver. There are some reports from some of the dealers and insiders. There are people that are saying that some of those flights have been reversed. So I'm not an insider. I can't tell you how long this squeeze will last. I can tell you that multiple sources report that it's so and that it's being addressed. So the question mark now is how long will it last? But what I'm saying here is, belay those rotten tomatoes. I think it's a good thing if this squeeze in London actually sorts out. I mean, I think it's great to see some of these silver shorts, perennial silver shorts. I think it's great to see them forced to eat their shorts. Maybe they'll think twice about piling on so many shorts in the future. But I would like to see the situation resolved because I'd rather see gold and silver continue a steady climb than go vertical, because nothing goes vertical forever. I think silver has been following gold more closely this year than copper as it was in the recent years. And I think that's a good thing. As a gold bull, I think it's great that silver is flexing its monetary metals muscles more this year than it has been recently. Last year, silver correlated more closely with copper than with gold. And I'm bullish on both, so that's actually not a bad thing. But if you're worried about the economy and you're worried about how Dr. Copper will react to that, then that is a potential headwind for silver, which gold doesn't have. So I think it's good. My fundamental view is bullish gold, and that's bullish silver, and I'm happy to see silver tracking gold. But I also think that in this very immediate context, this London physical squeeze going on over there is relevant. And I'm glad, and I think that's a good thing that explains silver's outperformance in the near term, because I don't want the explanation to be that silver is finally catching up to gold. Not yet. Of course, Mr. Market doesn't care what I want. But the answer to your question is that I think it is clearly the case. It's measurably the case that silver's gone back to, or people have remembered that silver is a monetary metal. It is also a safe haven asset, and that is a good thing. Now, why? Actually, I think maybe platinum gives us part of the answer here. You didn't ask about that, but the other expensive silvery metals, and I don't like the term precious metals because precious isn't a particularly important distinguisher. Monetary metals are different from industrial metals, and precious kind of blurs that distinction.
In the world of precious metals, something unusual has been unfolding. The spot price of silver recently jumped ahead of its futures price, signaling a rare and significant market distortion. The cause? A real, tangible silver squeeze happening in London. This isn't the result of speculation or online hype. It's a genuine shortfall in physical silver. Interestingly, global trade shifts, including tariffs and bullion movements from London to the US, have left London's vaults short right when demand is surging. According to market analysts, this squeeze has forced traders and shorts into a difficult position, and while some may see this as poetic justice, it's more than just market drama. It's a reminder of how fragile the balance between paper markets and physical supply truly is. Silver's recent leap to $54 reflects that tension. Not necessarily the end of a bull market, but a signal of growing pressure within the system. For long-term investors, the message is clear. Silver is reasserting itself as a monetary metal, not merely an industrial commodity. Its movement alongside gold this year reinforces that identity, and hints that the global financial landscape is shifting once again. Let's get into the interview.
When I say nobody goes broke taking profits, that does not mean I'm a bear. That does not mean I'm saying the market is peaked. I'm saying, look, you long-suffering gold and silver bulls, you've been waiting years, if not decades, for this. How bad would it be to be right but not make any money? That's all I'm saying. Don't let your big wins slip through your fingers. In fact, I haven't looked at the closing price today, but I think I just got triggered on an upside maximizer I have on a big silver win, believe it or not. And if that holds, then I will be going beyond the point of no concern on that stock come Monday. As an investor, as a speculator, it's my job for my readers to help them make money, to keep the money they make, and not get wiped out if things go in ways we don't expect. And sorry, one more thing on this. For the people who are like, no, well, this time is different, right? We have the central bank buying, and we have all this profligacy. We have $1 trillion deficits during peacetime. I agree with all of those things. But the arguments that the bulls were making in September of 2011 for why gold and silver needed to continue rising and rising forever were just as strong. Platinum is well below all-time highs. It still has a long way to catch up even to a nominal high. And silver is relatively cheap compared to gold. So I think this is part of what's going on, is that the gold's record run has got so many people paying attention to it who normally couldn't even spell gold, despite it only being a 4-letter word, that they're looking into alternatives. And this is benefiting alternatives, and that includes silver. as well as the other silvery metal. Silver did not perform as well as gold in that environment. It took a while, and
Yeah.
gold had a very V-shaped recovery. Silver was doing that more I've fallen and I can't get up thing for a while. And so I think it's really interesting that silver is reacting with gold now. There was a lot more concern then about silver's industrial side. And so this is part of why what I just said in our last segment, why I'm so delighted to see silver tracking gold again now. It's very encouraging to me as a person who, despite all the hate, despite all the Darth Silver comments, who still sees silver as money. That the central bank gold buying is a paradigm shift. It is absolutely a one-way door. Russia and China, certainly, they're not going to go back to saying, oh, it's okay to rely on the US to manage our financial lifeblood, right? And the diversification around the world is very clear. And it's not just the US's geopolitical opponents, it's everybody around the world.
In the world of investing, wisdom often lies in balance, knowing when to hold strong and when to take profits. The recent rise in gold and silver prices has reminded many investors just how cyclical these markets can be. Taking profits doesn't mean losing faith in the metals or believing the rally is over. It means being disciplined enough to protect your wins and stay ready for what's next. For years, those who believed in sound money, real, tangible assets, have waited for their moment. Now, as central banks quietly accumulate gold and diversify away from the US dollar, that moment seems to be unfolding. What's happening isn't just a price move, it's a shift in global financial confidence. Nations like China and Russia are walking through a one-way door, moving toward independence from Western monetary systems. Silver, once seen as the forgotten metal, is finally tracking gold again, proving its enduring role as both an industrial asset and a monetary store of value. The message is clear. The landscape is changing, and those who recognize this early stand to benefit most. The financial world is shifting, and the metals are speaking. Stay alert, stay balanced, and let's keep watching closely. Like, share, and subscribe for more insights on gold, silver, and the future of real money.